What's up, everybody? It's Nicky Trades back with another video. Today I wanted to dive into the charts a little bit. I wanted to dive into chart analysis, dive into the Thinkorswim platform that I use to chart my levels, to chart my trades, to take trades, and when I'm in and out of trades, making sure that I'm making the right decisions. I also want to recap some of the emotions that I'm feeling during some of my trades with all of you as well. I am going to recap a couple of the trades that I took today, some of the mistakes that I made, and again, walk you through some of the emotions that I'm feeling as that beginner slash intermediate trader and some of the mistakes that I make along the way as well. So if we jump right into this, I'm going to blow up our chart here for SPY. Now, SPY is the ticker that I typically trade the most. I focus the majority of my efforts, 95% of my time, on the SPY and the spiders here. And what is SPY for those of you that might not be familiar? Well, it's a bundle of tech stocks, right? I can't remember how many tech stocks it is. Once again, I'm still along the way, as a lot of you are in this journey of education. I think I want to say it's between 30 and 50 different stocks, tech stocks in the market. Apple makes up one of the largest percentages of this. Microsoft, AMD, Google, so on and so forth. So I typically, once again, will concentrate on the SPY chart. I do use SPX for confluence with SPY, meaning I want to make sure that I'm charting a lot of my levels on SPY and then charting a lot of my levels on SPX and watching them at the same time. The reason why I do this is because there's different levels that come up on SPX. There's different levels that I see and identify on SPY as well. So if I enter a trade or I'm looking to enter a trade on SPY, I want to make sure that that level is going to be in confluence with SPX as well, right? If there's a bounce, for example, I'm taking on SPY, we'll say at 390, for example, and there's a level on SPX, a key level not far above that on SPX, I might not want to get in that trade on SPY, right? I might not want to take that trade because there's a key level of potential resistance not far above on SPX. They work in conjunction with one another. So I want to make sure that I'm giving myself enough room when I'm entering a trade to make profit, right? Enough to make a good amount of profit where the risk reward is there for me. And I'm making sure that I'm going to have an A+ setup when I am entering a trade. But when we're looking at this SPY chart here, right now we're looking at the 3-year, 1-day time frame. You see that this is pretty crowded. I do have a lot of levels that I set. Some of them are older levels that I've set quite a while ago, meaning several months ago. But a lot of times I do like to keep those on my chart. Might not be the best idea for everybody. Again, I am in the learning process here, so eventually I'm going to probably reset these, clear this chart, and redo these levels as I find the higher highs, the pivot points, the lower lows, and things like that, trend lines, so on and so forth. So we can see here that a lot of these levels will date back up to 2 or 3 years ago. Because I like to find a lot of those key areas as far back of that. I found that SPY very much respects a lot of these older levels as they do the newer levels as well. So if we see here, I'm going to jump over to a shorter time frame here. We'll look at the 15-minute chart. And we can see in this chart, I have some of my key levels charted out here. And then you'll also see a lot of these different lines here. I do use the EMAs. I use the 9-day EMA, the 20-day, the 50, the 100, and the 200. Now, a lot of people might not want to use all of those EMAs. I actually don't really even follow a lot of the longer time frame EMAs. Typically, I follow the shorter ones like the 9 and the 20. That's most respected throughout intraday trading, especially when you're trend trading or looking at trends. We can see right here, for example, we're in an uptrend right now, and it is respecting the 9-day. A lot of times it'll come back down and retest and bounce off this 9 as it follows that trend until it reverses and goes back down, and vice versa. So we can see that right there. But we see here I set a lot of my key levels. Key levels are one of the most important, if not the most important indicator I use with trading. I keep very high confidence in my key levels that I use for support and resistance. I am also learning the supply and demand zones as well. That's one area I am focusing on because it's important. Just like it's important to use key levels of resistance and support. We want to make sure that we are focused on supply and demand areas as well. I know a lot of the big time traders out there very heavily rely on supply and demand areas. So I am focusing a lot of my education in those areas as well. So we can see here we have our 200 EMA. This should be the 100 EMA. Then we have the rest of the EMAs up here as well as VWAP. The thick orange line here is VWAP. VWAP, another important indicator that I do use or follow. And then, of course, one of the most important indicators of all would be volume, right? When we're looking at volume, we want to make sure that if we are in a trade, that volume is increasing in our direction. Or if we are looking to enter a trade for a reversal, volume might want to be decreasing as it goes up and we're looking for a reversal in take puts to go back down. Vice versa to take calls if we're approaching a key level of support, right? So what is a good entry? Well, I'm going to use this as an example. We might want to come up and we have a key level here. Intraday trading, we're coming up, we're having a slow grind here, and we finally hit this, we touch this key level of resistance that I have charted here, and we see that volume might not match, right? We have volume that is increasing a little bit here, but I'm still going to keep confidence that this is a good trade to take if everything else lines up, right? We want to make sure that this is going to respect and not blow through this key level here. So one of the trades that I actually took on Friday, this is from Friday's chart on SPY, was right here. I actually came back up. This came back up for another retest. We see it hit it 3 times. It got rejected here. Eventually came back down a little bit. It came back up again. So I actually took this trade for puts, and I wanted to see another rejection here. The reason why I took this here is because my risk-reward ratio is very good, right? We see if this breaks above this high, well, my stop loss is right up here. It's a tight stop. I'm not going to take a big loss here. I'm not worried too much about it. But the downside is more fruitful for me, right? So I didn't ride this all the way down. I think I got out right around here with this long wick here when it hit down here again. But it was a nice trade for me. I was happy with it, even though it was kind of in the trading hours that I try not to be in. I try to trade between 9:30 and 10:30 to 11 o'clock in the morning, and then potentially if volume is good, I look for power hours between 3 and 4 Eastern. So I do look sometimes for trades during that area, but volume was fairly decent on Friday, and then obviously you can see that it started to pick up around this area as well, around this time frame. So that's just an example that I took for a trade on Friday. I'll also talk about very briefly a trade that I took today, which was not smart, right? I made a mistake today. I felt a little FOMO. I did take a trade in the morning for I took calls on news, right? News typically comes out sometimes at 10 o'clock in the morning, 9:45 in the morning. We did have news today at 10 o'clock, and we did get this sharp we did get this sharp sell-off here on SPY. And I was looking to enter off of this sell-off. If this isn't going to continue to go down, I like this entry here because this was a little bit of resistance area pre-market. And then since we broke through this area, it now turned to support. This is also close to market close on Friday. So I wanted to use this area and look for this area as it bounced off a couple of the EMAs as well for a rejection. So I did enter here, and I made about 25%. I took one contract. Got about 25% out of that, and I believe I exited right around here at my key level as well. It was great execution on my part. I was very happy with that. But when I came over here, I thought that we were going to break to continue to go higher. We saw this huge green candle here. I got excited. My emotions took over. There was another trade in here at rejection that I wanted to take that I didn't. So I did feel FOMO from this trade. A lot of you out there probably feel the same a lot, right? FOMO is huge, right? You're like, shoot, I didn't want to get in, or I wanted to get into it. I didn't take the trade, and then you're really looking a little bit harder, and you get a little bit more impatient, right? You're like, damn, I really want to take a trade and make money because I missed out on that opportunity. Well, that bit me a little bit today, and it took away some of my gains because I saw this trade up here. I saw this big green candle. I saw the volume come up. I'm like, wow, this is really going to be the true breakout. I want to take this. So I watched for a little bit of a pullback here. And these are 5-minute candles. I entered not long after the close of this candle, so it was only a little bit down here, maybe the touch of this top wick here, and I entered. I did have a tight stop loss as well. I should have put my stop loss maybe a little bit lower, but I didn't want to eliminate all my gains that I made earlier in the day. So I did have this stop loss here. It came down, almost immediately hit my stop loss. Boom. Wiped out 60% of the gains that I made earlier in the day. Obviously pissed off at myself, very upset. Didn't have confluence, wasn't an A-plus setup, right? Didn't have confirmation of true confirmation of this breakout. Really was not a smart trade. Also on SPX and on ES, which I watch sometimes as well, there was some levels of resistance there. It wasn't broken out above 4,200. It was close, right? So that means 4,200 is going to be that whole psych number of rejection on another ticker. So they work in conjunction with one another, as I said before, and it was just a stupid trade for me to take overall. It wasn't broken out like it needed to, and it just wasn't a smart play. The smart play might have been to take that 4,200 reject on ES and ride that down for puts, as you can see here as well. So not the smartest play by me, but I still ended up positive on the day. 1 for 2, 50%. Obviously, you want your trades to be 75% and above. Really, the best traders in the world only hit at a 75% and above win to loss ratio, right? So we want to try to keep those trades up in that 70, 60, 70, 75% area, and really strive for that, right? That's the end goal, is to have that. But with our losses, everybody's going to take losses. We want to make sure that we practice that proper risk management, which is so incredibly difficult. I try to practice that every day. I still make a lot of mistakes. But also control the emotions, right? That's the mistake that I made today. I didn't control my emotions. I had FOMO, and it ended up biting me a little bit in the end. But we learn from our mistakes. We jot down and journal our emotions in the trades that we take every day. I journal every day, all the trades that I take. I encourage all of you to journal as well, because it's a point of reflection in making sure that you're expressing your feelings and what mistakes you made, so you can go back and make sure that you're holding yourself accountable to reflecting on those mistakes and making sure you're learning from those mistakes. If you keep making the same mistakes over and over again, you don't jot anything down, you're never going to get any better, right? So we want to make sure that we are journaling and we are jotting down our emotions, what we're feeling, jotting down the trades that we're taking, and also jotting down what we did well, right? What did we do well that we want to continue to do? But we also want to make sure that we're holding ourselves accountable in being a good loser, right? The best loser wins, in my opinion. I've heard that a lot in the stock market, and making sure that you're a good loser is the way to be profitable consistently in this market. So I'm gonna stop there for today. I hope you guys found some value. Please hit that like and subscribe button if you're interested in continuing to see more and kind of learn more from some of these videos. I'm going to continue to recap a lot of the trades that I take, and also some of the things that I'm learning in the market as an intermediate / beginner trader. I keep saying beginner / intermediate. I don't know where I am at this point. I'd like to consider myself intermediate, but the point is to be consistently profitable. That's our goal. I know that's your goal. So let's get there together, and please reach out to me with any questions, comments, and any changes we need to make together. But I'm excited to continue this journey. We need to make sure we continue to study, put the education in together, and let's get successful together. Thanks a lot for watching, guys.